So starting off with the trend indicators, a simple tool which will help us to say whether the trend is up, down or flat. And for this, nothing comes to the mind first rather than a very simple moving average. A very simple concept, but it works pretty well if you know how to use it. So what is a moving average? An average which is on the move. Let me straight away take you to a chart. We are in HDFC Bank. The D's over here are the dividends. So over here, when I come to chart settings, I see show RBS. RBS is rights and bonuses and splits and etc. So whatever, I just apply it and close it. So it's gone. So this is a weekly chart, right? Let me come down to the daily chart. This is a daily chart. I type S. I go to add. I type over here average. And I find over here there are various types of averages: 2 averages, 3 averages, adaptive, Hull, exponential, etc. Lot of different types of averages. Let's start with the simple and move ahead. Average simple. I double tap it. By default it comes 10, so let's say I make it 21. Next, the display is going to show me a standard line in green color, so I'll make it blue. I make it a little more thick and I apply. Control D is going to give me the data window. Control D is going to give me the data window. And when I come to the last Friday's candlestick over here, which is like a spinning top, the closing price I can see from the data window is 1652. And SMA, simple moving average, is 1654. What this 1654 says is if I take the last 21 days, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 21. From this day, which is the 1st of June to this day, if I take up the closing prices, if I sum it up and divide by 21, 1653, this blue line is what I will get. This is a simple moving average. The reason I've taken 2021 is because on the daily chart, it will give me a month, more or less a rolling month. A month, a calendar month has 31 days. A trading calendar month will have around 22, 21, 22 days. So I've taken around 21. This is a simple moving average. Now, I change the display to up and down, okay, and I show it to you now. What I've done is I have H will hide the prices, very nice. I typed H for hide and it has hidden the candlesticks. Now as I can see over here that this moving average, simple moving average of 20 days, this is how it looks. Let me get the line chart back. Let me get the price back. This is your price. If I ask you, I think the black was not very clean for someone, so we had made it dark gray, right?
It's 11 o'clock.
All right. Thank you, Siri. We're halfway. Now I ask you a question that look over here in this screen. I have the HDFC Bank daily closing prices. This is the line chart. Closing prices. And in blue and red, I have the 21 period simple moving average. If I ask you a question, which one is more volatile? Which one is more smoother? Okay, which one is less smoother? Or let's say I ask you which one is more volatile. What will be your answer? The price or the moving average. Which one is more volatile? Price it is, Amar. Yes. Yes, Raju, that's right. So the objective of a moving average is to smoothen it out. Look over here that the prices are going up and down and they go through their short-term corrections, and compare that with the moving average. It's very smooth and it's just going up. It's smooth because it's an average of 21. Price is not an average, so it is far more volatile. Number one, moving average smoothens out the data. Number two, moving average also go up and down depending on the price. If the prices are going up, the average will also go up. If the prices are coming down, the average will also come down. That's all right. So it can give me a direction of the market. How? It can give me the direction of the market in two ways. Simple way number one is look at price. Where is price compared to the moving average? Is the price above the moving average or below the moving average? If the prices are below the moving average, we are in a downtrending scenario. If the prices are above the moving average, we are in an uptrending scenario. So we should have a bullish bias, we should have a bearish bias. The other way is you look at the slope of the moving average. Is the slope positive? Yes, that's why I changed the color of the moving average to dual color. So another way is you look at the slope of the moving average. Is the slope negative? Yes, it's negative. So downtrend. Is the slope positive? Yes. So uptrend. So either you can use the slope of the moving average or you can use the closing price. So over here you notice with Friday's close, HDFC Bank after a very, very long time has closed below the 21 period simple moving average. But then if you look at the slope is still positive. So which one should we use? I will rather say we go by the closing prices. I rather go by the closing prices, and something more I'll show it to you today, one by one, step by step.